Hello guys, today I will be sharing with you some of the facts about a very important and influential management guru of all times, named Warren Buffett, also known as the Oracle of Omaha. Warren Buffett is one of the most successful and renowned investors in the world. As the chairman and CEO of Berkshire Hathaway, a multinational conglomerate holding company, Buffett has amassed a substantial fortune through his investment strategies and business acumen. In addition to his investment prowess, Buffett is recognized for his down-to-earth personality and his commitment to philanthropy. He has pledged to donate the majority of his wealth to charitable causes, primarily through the Bill and Melinda Gates Foundation, focusing on areas such as education, poverty alleviation, and healthcare. Buffett started investing at a young age, buying his very first stock at age 11 and his first real estate investment at age 14. He also studied under the legendary value investor Benjamin Graham while pursuing a business degree at Columbia University. Buffett is currently the fifth richest man on the Forbes list of 2023 with a net worth of $106 billion. He has served as the chairman and CEO of Berkshire Hathaway since 1970, and under his leadership, the company has become one of the largest and most successful corporations in the world. So let's take a look at the Berkshire Hathaway. The company owns and operates a diverse portfolio of businesses across various industries, including insurance, utilities, manufacturing, transportation, and retail. The company's investment portfolio also includes significant holdings in other companies, such as Apple, Coca-Cola, and Bank of America. Under Warren Buffett's leadership, Berkshire Hathaway has achieved remarkable growth and consistently outperformed the broader market over the years. His business acumen, investment expertise, and philanthropic initiatives have made Berkshire Hathaway and Warren Buffett synonymous with success and integrity in the business world.
We've had so much good luck in life, it sort of blows your mind, starting with being born in the United States, and Canada would be fine too, incidentally. I don't want to offend anybody.
If you were going to start a business today, what kind of company or what industry would you look to get into?
I'd do the same thing I've done. I mean,
Can everyone do what you do, though? I mean, do you think that?
I'm cut out for managing money. I would define work as doing something when you'd rather be doing something else. By far the best investment you can make is in yourself. Nothing can stop America when you get right down to it.
Buffett has made significant contributions to the field of management through his approach to investing and leadership. Here are some of his notable contributions. Value investing. Buffett is known for his philosophy of value investing, which involves identifying undervalued companies and investing in them for the long term. His emphasis on analyzing a company's intrinsic value and buying stocks at a discount has influenced many investors and fund managers worldwide. Long-term perspective. Buffett promotes a long-term perspective in investing and management. He advises against short-term thinking and urges companies to focus on sustainable growth and building enduring businesses rather than chasing immediate profits. Focus on business fundamentals. Buffett emphasizes the importance of understanding the fundamentals of a business. He looks for companies with strong competitive advantages, reliable cash flows, and solid management teams. His emphasis on assessing the underlying strengths of a business has influenced the way managers evaluate and select investments. Risk management. Buffett has emphasized the importance of risk management and the need to protect capital. He advises investors and managers to assess risks carefully and avoid investments they do not understand. His disciplined approach to risk assessment and management has influenced risk management practices in the business world. Ethical leadership. Buffett is known for his integrity and ethical approach to business. He advocates for transparency, honesty, and ethical behavior in corporate governance. His emphasis on ethical leadership and responsible business practices has had a positive impact on management principles and corporate culture.
Recommending that people buy stocks today or tomorrow or next week or next month, but you shouldn't buy stocks unless you expect to hold them for a very extended period and you are prepared financially and psychologically to hold them the same way you would hold a farm and never look at a quote. You don't need to pay attention to them, and you're not going to pick the bottom and nobody else can pick it for you or anything of the sort. You've got to be prepared to, when you buy a stock, have it go down 50% or more and be comfortable with it. There have been 3 times in Berkshire's history when the price of Berkshire stock went down 50%. 3 different times. Now, if you owed it on borrowed money, you could have been cleaned out. There wasn't anything wrong with Berkshire when those 3 times occurred. But if you're going to look at the price of the stock and think that you have to act because it's doing this or that, or somebody else tells you, well, how can you stay with that when something else is going up? You've got to be in the right psychological position. And frankly, some people can handle it psychologically. If you can't handle it psychologically, then you really shouldn't own stocks because you're going to buy and sell them at the wrong time. And
While Warren Buffett himself has never authored a book, many books have been written about him, his investment strategies, and his philosophies. Some books about Buffett focus more on his life and achievements, while others focus on replicating his investment style. Gaining insight into a great investor like Warren Buffett can be useful to beginning and advanced investors alike. One of the most important of the Warren Buffett quotes is,
Rule number 1, never lose money. Rule number 2, never forget rule number 1.
Otherwise known as Warren Buffett's Golden Rule, this quote sets the foundation for his philosophy for investing. Essentially, what Buffett is saying is that capital preservation should be the main priority for any investor when deciding to place their money into the market. Another quote by Buffett is, "Price is what you pay, value is what you get." This famous Buffett quote strikes at the heart of the value investor approach and reveals the secret of how Buffett made his fortune. Value investors are looking for deeply discounted share prices on the market. There is no better deal than a great company that is on sale for a low price. So the value investor mantra goes. To succeed at value investing, you should aspire to learn more about companies in the hope of discovering which are undervalued and, thus, great investment opportunities. Here are some of the clips of Buffett you might find interesting.
You don't need to be a genius in what I do. That's the good thing about it. I am in a game. You don't really need brains. You need the right orientation. 90% of the people that buy stocks don't think of them the right way. They hope it goes up next week. And if it's down, they feel worse. I feel better. I think about what the company's going to be worth 10 or 20 years from now. And I hope it goes down when I buy it because I'll buy more. I love it when the things we buy go down. Stocks are down today, and I'm buying more of something I was buying yesterday. I'm buying it cheaper. Now, when you go to the grocery store and you buy something cheaper than you bought it the day before, you think that's terrific. But people with their stocks, they think that the stock knows more than they do. When the stock goes down, they say the stock is telling them something, And what's telling me is I can get more for my money. But they take it as kind of a referendum on themselves, And it's me versus the stock. If it ever gets back to what I paid, I'm going to sell it. The stock doesn't care what you paid. The stock doesn't even care that you own it. You are nothing to the stock. That stock is everything to you. And you remember you paid $10.13. Therefore, the stock should get to $10.13 before you sell it. But there is nothing about the price action of the stock that tells you whether you should keep owning. What tells you whether you should keep owning it is what you expect the company to do in the future versus the price at which it's selling now, compared to the other opportunities of businesses that you think you know equally well, and make that same comparison. And that's all there is to owning stocks. When I want to do something, I always want to do it big. I've said many times that 65 or 70, and the people that you want to have love you actually do love you, you're a success. Some people should not own stocks at all because they just get too upset with price fluctuations. If you're going to do dumb things because a stock goes down, you shouldn't own a stock at all. The first books I read on investment were actually in my dad's office. I just read and read and read. I probably read 5 to 6 hours a day. I figured out very early, you don't have to be that smart in this business, which is fortunate, but you do have to have the right temperament.
And that is all for my video about Warren Buffett. I hope you guys enjoy it and learn something new from him. Thank you so much for watching this video. Don't forget to like and comment down below. Bye.